Hi, we are about to talk about Chapter 3. I've divided the PowerPoint into 4 videos because there's some fairly complex concepts, and I don't want to spend too long on any one video, get kind of hard to upload, and plus not that exciting for you. Alright, so cost behaviors. How do costs behave? So let's talk about that. What we're going to go over are fixed, variable, and mixed, so 3 kind of ways costs behave. We're going to talk about the resources and activities and how they relate to cost behavior. We're going to talk about a couple of methods for cost estimation, and we are going to talk about separating mixed costs into their fixed and variable, and we are going to talk about how reliable these methods of estimation are, how we can tell if we've done a good job, and we'll talk a little bit about multiple regression, great way to estimate anything, but don't worry, most of these quantitative methods I wouldn't expect you to be able to actually perform. What I want you to do is just sort of understand what they're doing and be able to interpret outputs, things like that, so you won't actually be doing regression analysis with data sets or anything like that. Although it could be fun, maybe another cost class. Anyway, we are not going to talk about nonlinear costs, and we are not going to worry about management judgment. So some of that stuff we'll just skip over. I've taken those slides out. So ready? Let's go. All right. So cost behavior is the term that describes how costs change relative to output, right? So whatever our cost object is, right, the more of those we have or make or do, the more the total cost is going to change. And so depending on how the costs work, we call that the behavior. So fixed costs don't change as our output changes, but variable increases as output increases. All right, so before we get any further, I guess if we're saying cost behavior is related to output, well, what do we mean by output, right? So typically, there are 2 general categories. One is the unit level drivers, right? So as we have more units, we increase our total cost. So a unit would be like 1 pencil, right? I'm a pencil factory and I make pencils. So if I make 1 pencil, what's the total cost of making 1 pencil? If I make 1,000,000 pencils, what's the total cost of making 1,000,000 pencils? So that's a unit, is a pencil, and how do costs behave with respect to per pencil. Then your other choice is non-unit level drivers. So I have this pencil factory, I'm cranking out pencils, but instead of counting how many pencils I turn out, maybe I count how many material moves the employees make. So they take this material one time and put it here, another material and put it here, right? So material moves, right? So the more of those I have, the more total costs go up. Machine hours. The machine that makes the pencils, however many hours it runs, that drives the total cost. Not how many pencils it makes, but how many hours it runs. So you can have different kinds of drivers, but the idea is still, as we increase that output, whether it's a unit or a non-unit driver, like machine hours, you're increasing your output, therefore you're increasing the total cost. And how does that total cost increase relative to those drivers? Okay, so first of all, let's talk about fixed costs. Fixed costs are costs that in total stay constant within the relevant range as the level of the activity driver varies. So first of all, this relevant range idea, clearly you can produce 1 pencil, you can produce 10,000, you can produce 1,000,000, 10 million, 50 million. So when we do cost accounting, there's a relevant range, right? We know that our factory at maximum capacity can produce 1,000,000 pencils. So there's no point in doing costs beyond that. So, or we know that we're going to have to step up and build a second factory, and that completely changes it, right? So the relevant range is some number that we are producing, and that's relevant to our cost accounting. So fixed costs in total stay constant. So pencil factory, well, we have a machine that makes pencils, and that cost us $50,000. No matter whether I make one or whether I make 1,000,000, it's a $50,000 machine. The salary for the supervisor. The supervisor doesn't get paid hourly. The supervisor just gets paid $60,000 a year, whether we make one pencil or no pencils. 1,000,000 pencils, 60,000. Those are fixed costs. So we can increase the unit output or the non-unit output hours, something like that, and that cost doesn't change. All right, so that's a fixed cost. And here's an example of fixed costs. You can imagine that this audio system produces speakers, and there's this part of a speaker called a voice coil, and the production manager gets $60,000 a year, and we produce them. So you can see, here's our relevant range, right? So we got one supervisor. We're producing 40,000, 80,000, 100. It still costs 60,000. Now, at some point, we're going to be producing so many that we have to hire a second supervisor, right? But this is what we call the relevant range. So our total cost stays the same. Pardon me. But as we increase our output, our unit cost goes down, right? Because I'm producing more, so the cost per unit decreases because it's always 60,000. So if you take 60,000 divided by 40, you get 150. 60,000 divided by 80, 75. 60,000 divided by 100. So your unit cost goes down if it's a fixed cost, the more units you produce. All right, and so you can see that in terms of a line, if you were to draw a picture of a fixed cost, x-axis, y-axis, so as we graph costs, and we're going to do a lot of this, we're going to draw a lot of lines and things in this chapter. Y-axis is the total cost, right? And x-axis is the units. So as units increase, total cost stays the same. Now at some point we produce so many we get out of the relevant range, so then that line increases up, but there you go. It's just a straight line, fixed cost, there you go. Okay, it's variable costs. Like it sounds, they vary with the units, right? So very direct proportion to changes in activity. So every pencil I produce increases, right? So you can imagine every pencil has a certain amount of rubber, metal, wood, lead. So every time I produce one of these, the cost increases. If I don't produce any, I have no variable costs, right? So the unit cost stays the same. So it costs me a nickel for every piece of rubber. Nickel, 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 right? But every time I produce another one, it increases. So here's this idea, same company, they have to have this cost of voice coils, and the direct materials cost, so the metal that goes into these coils, is $3. So every time you make a voice coil, you got to put $3 worth of metal in. So if I produce 40,000, 40,000 times 3 equals 120. If I produce 80, 3 times 80,000 is 240, and so on. So variable cost, pretty easy to understand. And if you were to draw it, the line would have start at 0 and go on within our relevant range. I mean, we may not be able to produce more than 200,000 with our machine, something like that, but it's just a line starting with 0 and increasing with a slope of 3, right? Because it's $3. So x, let's just draw a line. V, the variable cost, the total variable cost, is equal to 3x, right? So the slope of this line is 3, right? So there you go. Every time you produce another unit, you add 3 more to the variable cost. All right, that's it. Pretty simple. So you got fixed, you got variable. Now, let's face it, most costs are going to be mixed. Total costs for anything are going to be mixed, right? So if you think about this pencil, you got your direct material, your direct labor, and you have your overhead, some of which is fixed, some is maybe not. But you have a supervisor, you have a factory, you have a machine. Those things, whether you make any or none, it's a fixed cost. So what you're going to end up with for most things is you're going to have most cost objects, you're going to have a total cost for the cost object that's mixed. Some is variable, some is fixed, right? So if you think about it, you saw we had a straight line, you saw we had a line with a slope going out from 0. Well, we can draw that line for mixed costs. It's going to have an intercept at the fixed cost point, and the variable cost is going to be the slope of that line, right? So drawing a mixed cost is going to, y is total cost, right? Or y-axis, total cost is going to be equal to fixed cost, the intercept of the line, plus variable costs, which is the slope, right? Times x, which is the number of units. X is the variable, the number of units produced, right? So whatever we're trying to figure out how it increases by units, that's that number of units. The x-axis, how many we produce. All right, so this is just a line. This is just the equation for a line, right? Think back to, I don't know, whatever grade that is, 9th maybe? Y equals mx plus b. Well, there you go. The y-axis is equal to mx, variable cost being the slope m, x being your variable, and f, fixed cost, is your intercept, right, or your b, from the old-fashioned line equation, y equals mx plus b. So we're going to call it y equals f plus vx, but it's just a line, nothing different. Okay, so we're going to stop there, and we're going to come back and start talking about some ways to estimate costs, all right?